Well, welcome to another Workshop Wednesday brought to you by schoolofbookkeeping.com, where it's casual conversations for serious workflows. And Rachel's in her summer sundress, it looks like, ready
Oh, yeah,
for.
it's summer here, but it just rains every hour, and then the sun comes out, and then it rains.
Sounds
Summer in
like
Michigan is very strange.
sounds like it should be where I'm at in Washington with all the with rain, but actually it's been very pleasant and sunny most of the days. They're actually having a drought in in this
Yeah,
area
well,
of the
the
world.
Seattle area in the summer is amazing. I grew up there. It's gorgeous.
Excellent. So, so we're starting a new lesson, I guess, conversation topic, and this is all about assets and fixed assets. So we're going to talk a little bit about what a fixed asset is and some of the functionalities that you can do inside of QuickBooks directly, and then we'll talk about the glass ceiling. Okay, well, what if I need more than that? And we'll actually have an application come on next time when we talk about some of the things that some of the limitations of the things that we can't do here. So in general, so Rachel, since you're going through your master's in accounting, what would be the definition of a fixed asset when we're thinking of assets, liabilities, equity? When it comes to the accounting equation, there's the assets of things that you have, right? And that could be all sorts of things. So what would be textbook definition fixed asset?
Well, technically, we defined a fixed asset as something you own. So an asset is, I guess an asset is better defined as something you own. Like, let's say I not owned, but I own a bank account, or I own a piece of property or land or a building. That's technically an asset. Well, a fixed asset is typically, when we're talking about that in accounting, we're talking about something that goes in one of those buildings, let's say machinery or furniture or electronics equipment or something like that. So the difference between a fixed asset and, let's just say, an expense, something that you buy, because a lot of times this can be very confusing. Let's say I go to Office Depot and I buy, a whole bunch of office supplies. Well, that's technically going to be under, a reasonable amount. And so we call that an expense because we're recognizing the expense of that item right away. A fixed asset would be the opposite. We are going to Home Depot, but I'm going to go there and I'm going to buy, let's say, $7,500 worth of office furniture. Well, if it's over a certain amount, which we call a capitalization threshold, which
Oh
can
my
be
God.
a little confusing, but technically the IRS lets a business decide what their own capitalization threshold is based on their industry. Typically, it's about $2,500. So what that means is, like, if you go to Office Depot and you buy a whole bunch of furniture, and let's say it's over $2,500, what we want to do is we want to consider that a fixed asset, and that goes on the balance sheet rather than an expense right away.
Mm-hmm.
And then we depreciate. That monthly amount of depreciation becomes the expense, and then that asset depreciates until it gets to its salvage value. So it's typically a higher ticket purchase that we're going to put on the balance sheet, in a nutshell.
Right. Yeah. So in my layman's terms, when I look at the accounting equation of assets equals liability and equity, I mean, the easiest easiest way to describe that in real world scenario is a home, right? You buy a house, you have
Yep.
a house, and it's valued at something, and then that's going to be made up typically of the liability of what you owe on it, and that could be the mortgage or the note, and then the equity is the difference between the value of the house and what you owe. So if you were to actually sell it, that would be what you own in that
Yep.
home.
Exactly. Exactly. So that's a really good way of put it of how it adds up in the accounting equation.
Right. But when we're talking about, just the asset piece of that, this is the stuff that you have there. What I heard you say is that there's a couple considerations when you can classify what that asset actually is, whether it's, and in general terms, it's either current assets or fixed assets.
Hmm.
And the one consideration is the value of said asset.
Yep.
And then another consideration, which you did mention, is how the useful life of said asset, right? When you're
Yeah.
talking about a house,
Exactly.
when you said we're in this grand scheme of things with the house scenario, right? That house is typically going to last uh, pretty a long time, or at least more than a year, and that's normally the threshold that where people are looking at, well, how long is this thing going to last on my books, right?
Yep.
How long am I going to have ownership of this, right? So when you're talking about inventory, and you're very interested in managing inventory, if you're only looking at the value of said thing, or how much it costs, and this is inventory. If you have high ticket items, like a car, right, but you're not going to maintain it or keep it, or hopefully you won't have it on the lot for more than a year, right? That inventory is a current asset, even though the value of said asset per unit is higher than that threshold of, say $7,500 or whatever that happens to
Yeah.
be. So it's a combination of the time of useful life that you're going to have it, and the value of said things. And typically, when we're thinking of like a fixed asset for a business, like you mentioned, office furniture, computers, um, machinery, things that you're going to be using, vehicles, obviously, would be another thing if service trucks and things of
Yep.
that nature. Those would be what you would consider to be fixed assets, because they're typically going to be around for longer than a year, and
Yep.
that value threshold is going to be there. And the biggest concern, right, and I think we were alluding to that, is that, okay, I'm going to go down to Best Buy or Office Depot and buy a computer that's over that threshold, or a bunch of office furniture that is over that threshold. The consideration is, okay, do I expense it all today,
Right.
or do I hold that as an asset in the business, and then through the magic of depreciation, you mentioned that word, and that that tends to cause people to go, oh no. Through the magic of depreciation, you are expensing that over time
Yeah.
rather than expensing it all at once, right? Because that
Yes.
can tends to be a big challenge. And and you're saying it's really the choice of the business, or is there more rules that come with that? Like,
Well,
is it either or, like, hey, I want to expense all this stuff up front, I can do that, or is it more of like, wait a minute, there's going to be an IRS agent knocking
yeah.
on your
Well,
door later?
it really depends on what method they are filing their taxes and keeping their books, if they're doing an accrual basis or a cash basis. So, here at my business, at my accounting firm, Net Deposited, we follow GAAP rules, which are generally accepted accounting principles as it pertains to accrual accounting. So I don't really have any businesses that are managing their books on a cash basis, because my clients are typically inventory based clients. So when you're dealing with inventory, you have to use accrual basis, and a story for another day, but it really has to do with recognizing your cost of goods sold at the point of sale. So you
Mhm.
want to recognize, you want to keep your inventory on your balance sheet, and you want to recognize that little bit of cost of goods sold when the item is sold. That's a proper way to do it under GAAP. So if you're following GAAP principles, you want to incur the expense in the proper accounting period. So let's just say your cash basis, meaning your books are your income and your expenses are being recognized when money changes hands. So that's, you go to Home Depot and you buy $12,000 worth of computer equipment. If you're on a cash basis, yeah, you would just expense that right away. Now, is that going to give you an accurate portrayal of gross profit?
Right.
Probably not. And that's why, if you're wanting those little bit more advanced measurements of your business, such as looking at things like profit, looking at things like margins and that kind of thing, you definitely want to be doing accrual accounting. And in that situation, yes, we really want to adhere to a capitalization threshold. And really, it really depends on your industry. So let's say for instance, yes, you are going to be following accrual bookkeeping and accounting, and so you are going to be recognizing depreciation, things like that. The IRS does say that it really does sort of depend on your industry. There is no set capitalization threshold. You can consult your tax professional and determine what the best threshold is for you. So now, but then what I was going to say to your point, which was a very good point, is, going and buying.
Asking those kinds of questions, so they've had no outlet
to
be able to do
going and
Oh.
buying things like computer equipment is going to depreciate much faster than, let's say, office furniture. So fixed assets aren't fixed assets. I mean, there's different kind of fixed assets, but by and large, like you said, it's really something that's going to be on your balance sheet for a considerable amount of time, definitely more than one accounting period, meaning 1 year. So we really want to recognize that. And then, how fast do you want to depreciate those things? Well, there's different methods of depreciation, really kind of depending on what the asset is. So it can get very, very complex, but fundamentally, we're just talking about putting stuff on the balance sheet, making sure we're recognizing the accumulated depreciation and the depreciation expense. And those are the things that I know you're going to mention that QuickBooks Now can do for you.
Yeah, because in the past, prior to this new-ish feature in QuickBooks Online Advanced, the amount of what that depreciation would be and calculating all of that was really left into the hands of the accounting professionals that would enter these things and figure them out.
I still do it manually, by the way, which I don't mind. I like doing it, but and I do think that every good accountant should know how to do it manually. But the fact that this can do it, and track it is incredible. I love it.
Yeah, it's that's always been kind of like QuickBooks Desktop had in accountant versions and enterprise had a fixed asset manager application as part of the installation of QuickBooks Desktop, which was the ability to put synchronize those fixed assets into the fixed asset manager, and then associate the book value, the salvage value, and assign the depreciation method, which we'll talk a little bit about when we kind of demo it here inside of QuickBooks Online. And then those entries would then be calculated. So it basically was a depreciation calculator, and then it would synchronize the journal entries back into the QuickBooks file on whatever schedule that you felt like making. And that didn't exist inside of QuickBooks Online at all until this fixed asset feature decided to make its head rear its head. Right. So let me go ahead and share my screen here. We're inside of uh, my demo account here, and over on the left side, where is it hiding now? Advanced accounting is where it's hiding inside of the QuickBooks Online Advanced. Now that's one caveat to all of this, is that this is only available in Advanced. So if you don't have any other if you have any other version of QuickBooks Online Plus, Essential, Simple Start, Solopreneur, Ledger, whatever, this feature doesn't exist. So it has a nice little video embedded in it, or it takes you right to the article that QuickBooks has about it, of how it does work. You can set up individual assets, or you can add multiple assets, a la a spreadsheet
Oh
kind of
man, that's
format.
cool. Yeah,
If you
because
wanted to.
one thing I'm thinking of is, let's say you're a bookkeeper or accountant and you're taking on a new client, and they send you a list of
Right.
all of their assets that need to, say you're creating a new instance and you need to get everything in all at once. I didn't know that there was this add multiple feature. That's
Right.
cool.
Well, there we go. So when you do add an asset, you're just going to call it whatever it is. So let's just call it a truck. So you have service truck. You can assign your class and your location to it if you want. You can put a description. So service vehicle, and then whether or not it's depreciable. Ugh, I can't say that. Whether or not you want to depreciate it or not, and in simplest terms, depreciation is just associating the declining expense of the or the value of said asset. Especially in, you always hear that about vehicles. As soon as you drive them off the lot, they are worth less than the price that you paid for them. So that expense over time is what you are accounting for in the grand scheme of things, rather than, again, expensing it all up front. And then, like, to your point, I have a huge negative net income that month if I were to expense a truck purchase in January,
Exactly.
as
That's why
opposed
for,
to.
a really simple business that isn't necessarily looking at those things, maybe they're literally just doing compliance bookkeeping to plug a number into their tax return.
Mhm.
That's something, somebody that would do something like that,
Right.
expense something right off the bat. But by and large, a business that really wants to look at, their performance and, with a little bit more analysis, you'd want to depreciate something on a proper schedule.
Right. And speaking of schedules, then you have this depreciation method drop down. It is important to note that there are only 3 supported methods of depreciation. Straight line, simplest terms, is it's from point A to point B, the day that you put it into service to the end of its useful life, which you're going to be specifying here in the number of years. So let's say it's 5 years for a truck. Straight line is just going to take the value and the in that depreciation expense, and just the same amount each month
Yeah,
is
equal amount.
is what's going to do it, or on whatever schedule that it is. Straight line. That's the whole idea of straight line. Double declining balance, and 150% accelerated. Please ask your accountant what these mean. Uh, but basically, it's whether or not you want to put most of the depreciation expense up front.
Yeah.
In the example here of the truck, immediately, it's got some declining value as
Yeah.
soon as you purchase it. So maybe you want to expense that up front, and then over at the end, it's more of a little less of a depreciation expense. But the thing is, you can't change this midstream, right? Like,
No.
once you decide on a depreciation schedule and useful life, you should leave it and not change it, right? It's like changing your inventory cost value, calculation from average cost to FIFO. You can't do that because you potentially could be double dipping,
Yes.
the value or the expenses at that time. If you have other methods of depreciation that you want to use, then and it's not supported by this at the moment, then of course you're kind of out of luck using this feature.
Yeah.
So
You can still do it manually,
Yep,
but I mean, these are honestly, these are the most common.
Yeah.
And so it's to me, this is impressive.
And then you're going to enter in, of course, the useful life. So you're going to assign that, and you're going to work with your accountant to determine, what that is, and or they may be just setting this up for you. And then you're going to be putting in what the salvage value would be. So at the end of its useful life, what would that value actually be? I mean, you can say it's worth nothing, worth less. I can't put 0 in there. Why can't I type it? Parent. Oh, okay. Well, let me put it. Oh, you got to put a number in there, but it can't be 0. Okay. Well, that's interesting.
Okay.
It's got to have some value, even if I wanted to put 0 in there. I can't lead with a 0. So that's
because even if a vehicle, salvages down to $500, I mean, it's still worth scrap metal, so it can't really ever be worth
It's got
0.
something in there.
Yeah.
All right, and then you're going to associate the accounts, right? So if you've set up the account ahead of time, it'll just be listed there, and it's only going to list fixed assets as the type of account. So we can just choose add new. Okay, and then this is a fixed asset, and you can assign what that actually is. Where is the vehicles? Fixed assets. No, that's not. I guess other tools, equipment.
Yeah, sometimes doesn't QuickBooks actually they just call its own account of vehicles. I don't know if it's.
Yeah, so you have a section here. Oh, wait a minute. You're right.
Yeah, it's called just vehicles. Yeah.
It's not fixed asset vehicles. It's just vehicles.
I noticed that.
All right, and then again, whether or not we're using account numbers and descriptions, entirely up to you. To do that, and then you just hit save. And now I've associated that asset account, accumulated depreciation account. That is the account that you're going to be associating these expenses to, right? So the truck itself is valued at something, and then over time that depreciation is going to reduce the value of the truck on the books. So that's where the accumulated depreciation is going to come from, and it's also a fixed asset. Typically, prior to all of this, when people would ask, how do I set up a fixed asset, you would create the fixed asset account with 2 sub accounts. One would be the value of the asset itself, and the other would be the accumulated depreciation, so that it will roll up into that parent account as that total value. So you've got a cost and an accumulated depreciation as a sub account. And then there's accumulated depletion and accumulated depreciation. Be careful you don't choose the wrong one there. All right, and that's just accumulated depreciation. And I didn't have my lagging second capitalization, which is even better. Okay, and then where we got that unknown error. Uh-oh. What did they do? Maybe I have. Maybe I already have an accumulated depreciation account.
Yeah, it might already be in there.
It'd been nice if it would say another account with that. No.
Yeah, and actually,
and then we layer in the parts that we have to in the ratings. And
I think hold on. I think you might not be able to put it under that. Hold on.
Let's see here. So what is it? This account tracks the total amount of depreciation for fixed asset as a contra asset account.
It's
a paired with an offset.
I don't think you can put it under fixed assets. I think you got to put it.
It should. Under. That's usually where it goes. But let's try that again. Accumulated depreciation, and then this is Depreciation. Oh, now I've misspelled because now depreciation. Does not like it there. Not sure why it's doing that.
Yeah, I'll you so go to fixed assets. That no, back to where you were. No, up. Save under fixed assets. Drop down more. You should have a. You don't have depreciation.
I need to do it under the. I do need to do it under the.
Yeah. Okay.
All right.
I was gonna say that might be too high for you got to go further down in the arrow.
All right, so let's try that here. So save. Aha!
There you go.
See, and of course I misspelled it. Dang it! But that now it's on the chart of accounts. You can edit that. Depreciation expense then is the account that you're going to be accumulating said depreciation to, and this needs to be an other expense account. So this is something I was looking at here. So we're gonna. Do we have accumulated? We do not. Okay, so we're going to add new. This is going to be an other expense. Depreciation and depreciation
now,
expense.
If there's business owners that are watching this and they just name something truck,
Right.
I was going to say, I usually like to name it like 2016 Ford F-150.
Yeah.
I like to call it.
Right, be a little bit more specific with your naming convention.
Yeah.
Especially if you have more than one truck.
Yeah, exactly.
Exactly. So at this point, so we've put in the purchase price $60,000. The salvage value is $500. We realize that can't be zero, and we've said the useful life is 5 years, and we've told it straight line depreciation method. As soon as I hit save, all right, it's added successfully, and the first depreciation entry will be posted at the end of next month. And there it is. There's my.
Oh, I love that.
My asset value, the depreciation over the course of this year. So it's again, because we chose straight line, it's choosing whatever that expense is over 5 years divided by 60 months. It's $991.67 each month that is being expensed, starting as soon as you put it in place. Now, what if this was historical, right? We're trying to enter this in prior to today. The depreciation and the fixed asset depreciation schedule and the automated here is only from today moving forward. So if you have prior depreciation to enter, you're going to have to enter that in manually. But from this point forward, those depreciation entries are going to be entered in on a monthly basis. Now, it doesn't do anything on any other basis other than monthly. So if you prefer to have it annually, then this option's not for you, because it's going to be doing this on a monthly basis. But you can see the schedule, and then ultimately when it gets to 2029, there's our remaining salvage value of $500 that would be left on the books, which would stay there until you decide to dispose of it. And then what if it's more than $500? Well, then you need to account for the that difference between the salvage value and and what you actually receive for it as revenue at that point. So it could be another other income event here if you dispose of this truck and get, say, $2,000 for it. That $1,500 would now be revenue to the company. And what do we have here? So we have our dispose options, and we can delete them if we wanted to. So now we have fixed assets listed here, and we can view, edit, dispose. We can duplicate, and then again we have this option of the add multiple assets. and you can modify the columns if you do. And if you do have a spreadsheet already and you just want to kind of copy and paste it into here, you can do that. Just formulate or move the columns exactly the way that your spreadsheet is, or vice versa, and then you just copy and paste it into the add multiple assets here. So it's a really nice feature. It's nice that it's directly within QuickBooks Online, whereas in desktop it's actually a separate application that you have to open. There's a big desktop challenge when it comes to when you skip years and you have fixed assets. This is all within side of QuickBooks Online directly. You don't need to go anywhere else to enter those things in and then push them back into QuickBooks.
Yeah, and I like that when you're using that, it just has a little built-in schedule, so it's not like you need to go out to Excel and create your depreciation schedule and then save it, go into your recurring transaction and then save that spreadsheet. You know what I mean? It's typically like how I did it before.
Right.
So yeah, this is really cool. I really like it.
Now, Jamie said change tax form. What did I?
Yeah, she was talking about when you were when you were adding that GL account. She was like, change in the little drop down thing. She said change tax form.
Oh, gotcha. I wasn't. I was looking over here and I didn't see the comment come in. But yeah, that's how you would use it now. So just bear in mind, it's only QuickBooks Online Advanced that will have this feature, and of course your QBOA your books is advanced books, so you would have that as the ability to do that inside of your QBOA account or any of your clients, or if you are a business owner, as long as you're on the advanced subscription. So we have added this little
yeah, I have it in mine. It's cool.
And in School of Bookkeeping, we've created a sub-module inside of the QuickBooks Online Advanced tutorials just for all of this stuff. We've also taken Intuit's articles and put them in there as well. So you really just have it all in one place when you're using School of Bookkeeping. And if you do need to have an access to it, and if you don't, here is a link for a free 30-day trial if you wanted to check this out on schoolofbookkeeping.com. So now the question is, what if I need some other depreciation schedule, or I don't have QuickBooks Online Advanced, right? So there's challenges there. So this is nice, and I do appreciate this feature, but it's kind of like In-N-Out Burger. It does one thing really well, right? But if you want chicken nuggets, you're not going to get them at In-N-Out Burger, even if you do find the secret menu.
I thought you were going to say the burgers are their one thing good they do right, and not the fries, because I hate In-N-Out fries.
They are, yeah, they do have, especially if you ask for cheese fries and they just throw a slab of cheese on it.
Not a fan.
That's not a fan. Yeah.
No.
What is your favorite French fry then?
I don't know, but I definitely I'm not really a big fan of it. Now I love the In-N-Out burger, and you know what I will say? I like Shake Shack fries because they have the what is it called? The crinkle fry.
Crinkle cut. The crinkle fry.
Yeah.
Yes. And you can actually get cheese sauce instead of this slab of cheese that's on top of it. And because they are crinkly, they just grab onto that cheese like they're supposed to.
Exactly.
So yeah, we've digressed a little bit into
yeah, now I'm like
French fries.
Burgers.
So yeah, if you want chicken tenders, you got to go to Raising Cane's now instead of which has really good French fries, by the way. Um, um, if you want something else other than what's on the menu for this fixed asset manager, then you're going to need to look elsewhere, right? Or if you're in QuickBooks Online Plus or Essentials, this feature just doesn't exist. And if that's the only thing that is causing you to go into QuickBooks Online Advanced, that's a little expensive
Yeah.
of a jump. Going from even Plus at now $99 a month to $235 a month is quite a leap just for a depreciation calculator, because that can be done outside of QuickBooks, and you can create your journal entries as recurring transactions and so on and so forth. So
Yeah, and
you
I was
have
just gonna say, there's a lot of, I know that oftentimes there's a lot of chatter about you can't do that in QuickBooks Online. Well, you can do anything you want in QuickBooks Online if you're doing it manually. So there always is that option. I always like to throw that in there.
So next time that we're going to take a break next week, and so we'll have a replay of one of our popular workshops next week. But the week after that, we're going to have Ash Ash from Net Tracker. He's actually an accountant in the UK, so we'll be fortunate to have a nice UK accent on on the workshop. But he has created an application to help with creating the depreciations outside of QuickBooks, and then push those journal entries. And there's other things that you could potentially use this for, like loan calculations is coming in the future, as well as prepaid expenses. You can do that, and revenue recognition. You can do these things inside a Net Tracker, and that it doesn't require you to have QuickBooks Online Advanced to do these
Awesome.
things. So,
God, I love apps. Any kind of app I love. And of course,
Right.
and all those things are really, really important if you're doing accrual accounting, which that's the only thing I do. So yeah, it's real. Those things have to be done.
Right. So we'll, hopefully you can join us in a couple weeks when we have Ash on from Net Tracker and talk about that. But hopefully you have a great day, and we'll see you next time on the Workshop Wednesday.